We're here at the CFO Playbook for Private Companies conference in Miami with James York, who's the CFO of Initials Inc., which makes ladies' handbags and some other kinds of accessories. You told me that Initials has had a pretty flat growth curve for the first 5 years of existence. In the last couple, 3 years, that curve's gotten a lot steeper. What's that been about?
Initials Inc. is a 9-year-old direct selling company, and so we have two opportunities. One for the modern woman who desires to be a business owner and they can go out and sell our product. And then also we develop products for the demands of the lifestyle of the modern woman. And so over the first 5 years, the data really wasn't telling us a lot about making better business decisions. And so as the CFO, I came on board roughly about 3 years ago and started a platform of re-entrenchment, reorganization, and kind of getting the data to tell us more about our business, what decisions to make, again, what decisions not to make, new strategies to bring into the business. And so that reorganization has been really the success of the last 3 years. One, it proved the business model to be profitable, which we have reinvested the profits back into the company for growth strategy, which has been able to help us maintain, sustain, and facilitate the triple-digit growth over the last 3 years. Some of the key elements to the transition from the first 5 or 6 years flatlined and the last 3 years of exponential growth really have to do with the CFO role. The company had hired bookkeepers before that really didn't give them any smart data back, and so they really didn't have any KPIs to make better business decisions. And so I am a very integral part on the front end at creating, driving, relationship building within the organization to vet different strategies, make sure that the return on investment is there for our company. We have organized a team of great talented people, both in our sales and marketing ends. We are very strong in sales and marketing. We utilize social media extensively. Our operational strategies that we have employed have capitalized on efficiency and scalability. Also, one of the critical points to success and growth is the access to capital. And we have funded our growth through reinvestment of the profits. And in 2010, we went through a re-entrenchment reorganization process. And then fourthly, culture is a huge thing in our organization that we weekly meet about and maintain and hire to, creating an incredible culture that has a work-life balance.
Well, how will your growth strategies change in the next 2 or 3 years to continue that acceleration?
Well, the direct selling industry is a $32 billion industry. It involves about 16 million people. And specifically, our segment is handbags and accessories, and that industry is a $14 billion industry. So we have the capacity to grow significantly. The market is there, in other words, and so we want to go out and grab market share for sure. So we don't intend for our growth strategies and patterns to change, only continue.